I want to welcome you to ThinkCoach's financial training for business owners. This training is presented by Charles Edge, founder of ThinkCoach. Our mission is to help you grow through knowledge so that you can think twice and implement once. To be a great business owner, you need to understand simple financial principles. The purpose of this program is to teach you how to do a quick and simple analysis of your business's finances and expenses, and how you can use that information to uncover dramatic and instant increases in your profitability. We'll begin by helping you to understand how to interpret the numbers in your profit and loss statement. If you don't have a P&L, no problem. Later in this program, we'll teach you how to create one in minutes. From scratch, we'll reveal to you the three most important numbers in your P&L and on how to use those numbers to increase both your revenue and profits exponentially. We'll give you 6 options for increasing your revenue. We'll explain the deadly factors to watch out for when analyzing your cost of goods sold. Purpose and focus. We'll outline 5 quick ways to lower your COGS, along with multiple ways to lower your overhead. We'll also want to show you how to discover the hidden financial potential for your business. You may find you're shortchanging your financial potential big time. And since we know that marketing is a big part of operation in any business, and most businesses today favor the internet as their primary marketing platform, we'll reveal to you a formula you can use to predict in advance how much you can spend on online marketing and be sure you'll make a profit. We're going to hand you your very own internet marketing crystal ball, so to speak, so that you can move forward and drive your business to new levels of prosperity. But there's one important thing to note. We are not accountants, and nor do we pretend to be. The information we'll present to you here has been vetted and gold stamped by multiple accountants and CPAs. However, states, territories, and countries all have their own specific laws governing accounting and finances. So we suggest that you seek out a professional for advice before taking action. So, does that sound good? Then let's begin. Today's focus, understanding the power of your profit and loss statement. Here's what we're going to cover today. How to find instant and immediate cash flow as a small business owner. How to uncover hidden revenue from your P&L statement. We're going to help you understand the 3 key numbers in your P&L statement. And finally, we'll show you how to use those numbers to create exponential growth for your business. And by doing so, you will dominate your market. Alrighty then, so let's begin by examining the P&L statement. Here's a standard template for your typical P&L. We'll use this template throughout the training. As you can see, it consists of 7 basic sections. Revenue COGS, commonly referred to as cost of goods sold. Gross profit, which is calculated by subtracting your COGS from your revenue gross profit percentage, which is calculated by your gross profit by revenue overhead, which represents the bills you have to pay every month, independent of whether or not you make a sale. Net profit, which is your gross profit minus your overhead, and net profit percentage, which is calculated by dividing your net profit by your revenue. Now, for the sake of consistency and to avoid any confusion, we'll stick with these common names throughout this training program. But I want to make you very aware that these names often vary depend upon individual preferences. You may have an accountant or CPA who uses different terminology than what's listed here. So let me show you some examples. Revenue is also referred to as gross revenue, and in some cases it's called income. COGS is often referred to as variable cost. As I said earlier, gross profit is your revenue minus your COGS, and this figure is important since these are the funds that pay your overhead. Gross profit percentage is your gross profit divided by your revenue times 100. Your overhead is also called fixed cost. These are the bills you have to pay every month, such as your rent or your mortgage, utility, insurance, advertising, and so on. Net profit is known as income and what most people refer to as your bottom line. And finally, net income percentage is calculated by dividing your net profit by your revenue times 100. There are actually additional names above and beyond these that some accountants and CPAs use, but for now, we're just going to stick with our standard template that's on the left. For training purposes, let's create a sample P&L for a make-believe widget company. Let's assume this company sold $300,000 worth of widgets in the last 12 months. They spent $180,000 in material and labor to build the widgets. So we record that as their COGS. We subtract that number from their $300,000 revenue to find our gross profit, which is $120,000. We divide $120,000 by our $300,000 revenue to find our gross profit percentage, which comes out to be 40%. This widget company has $60,000 in overhead costs. This represents their bills. Now we subtract our $60,000 overhead from our $120,000 gross profit to find our net profit, which comes out to be $60,000. And finally, we divide our $60,000 net profit by our $300,000 revenue, which gives us 20% net profit percentage. As you can see, there's really nothing complicated about a P&L at all. But I know that when it comes to interpreting these numbers and using them to grow your business, it can seem a bit complicated. So guys, I have some really good news for you. There's really only 3 numbers you really need to focus on any P&L statement. These are the ones highlighted in red. They're revenue, COGS, and overhead. The reason these are so important has to do with the simple fact that these 3 are the only numbers in your P&L that you can directly impact. The remaining 4 numbers are all determined by these 3. You find your gross profit by subtracting COGS from revenue and then dividing that number by the revenue gives you gross profit percentage. When you subtract your overhead from your gross profit, you find your net profit, which you then divide by revenue to determine your net profit percentage. So these 3 numbers you can directly impact, and they're the ones we're going to focus on to help you make dramatic financial gains with 0 cost. They are revenue, COGS, and overhead. Alrighty, let's dive in with revenue. In our widget company example, we said our revenue was $300,000. But what exactly is revenue? Well, revenue is the total amount of sales recognized for a specific reporting period prior to any deductions. When you sell something, it is the total amount you collect from that sale. Now, this figure is obviously important as it indicates your ability as a business to sell your goods and services. However, it does not indicate your ability to generate profit. However, often we do hear businesses today that make millions of dollars that have no profit whatsoever. But we can directly impact revenue in such a way that we can see dramatic revenue gains without relying on marketing, advertising that can run up expenses big time. I'll explain that shortly. Now, let's move to our second impact area. And that's the COGS, baby. The cost of goods sold. In our widget example, we said our COGS was $180,000. COGS is defined as the cost incurred to deliver on your contract of sale. These are costs such as labor, which can be direct and contractual material, scrap and rework, packaging, distribution and shipping, and cost of sales commission. In most cases, COGS will typically increase as your sales volume increases. There is one important thing to remember about COGS. COGS doesn't exist if there is no cost to deliver whatever it is you sell. In most cases, this describes professional service providers such as business coaches, financial planners, web designers, chiropractors, law practices, consultants, accountants, and even business brokers. The vast majority of these professionals dispense advice and services that have no real cost to deliver. The typical gross profit margin for these professionals can range from 50% to 95%. So we'll only have 2 areas of impact on their P&L, revenue and overhead. Little to no impact whatsoever on their COGS for these types of businesses. Last, but certainly not least, is overhead, also frequently called fixed cost. These are the costs you incur regardless of whether or not you make a sale or not. Overhead represents your daily, weekly, and monthly expenses. They are required to operate your business, such as your mortgage or your rent, your insurance and utilities, office supplies, office salaries, general maintenance, advertising, janitorial, your auto expenses. The reason these costs are referred to as fixed as has to do with the fact that these costs reoccur. Your rent and your mortgage is always there. Your utilities, always there. Not to mention the fact that these costs typically remain constant despite your sales volume. So, as I said before, and I'll say many times after, these are the only three numbers we want to focus on and improve in order to help us generate more profit in your business. Now, you may be asking yourself how these three numbers can generate any meaningful results that can significantly impact your business. Stay tuned. We're going to show you the magic.